I'm Nicholas Siragusa, and this is my database research project. I'm in Accounting 311, and I'm in Section 1. So, the industry that I'm going to be talking about today is the mattress frame industry. Specifically speaking, Tempur Sealy's, Sleep Number, and Havertys Furniture. So, throughout this presentation, we'll do a tour through the history, the products that they sell, and of course, a financial analysis of three of the largest and most well-known mattress frames in the country. So first we'll start off with Tempur Sealy's. Move my webcam. So, the timeline. In 1881, Daniel Haynes invents the mattress and started his own company called Sealy Mattress Company. In 1992, Tempur-Pedic launches their products with the trademark Tempur material. And then in 2013, those worlds collided and they merged to create Tempur Sealy's, the world's largest bedding company. Tempur Sealy's develops, manufactures, and markets mattresses, adjustable pillows, and other sleep and relaxation products. They also hold some of the most recognizable brands in the industry: Tempur, Tempur-Pedic, Sealy, and Stearns & Foster. So, Sleep Number. In 1987, Select Comfort was founded by Bob and Joanne Walker in Minnesota. Then in 1998, Select Comfort became a privately traded company under Airbnb, which nowadays would be confused with Airbnb. So it's good that in 2017, Select Comfort changed their name to Sleep Number Corp. And its ticker symbol SNBR. So, this company specializes in the smart beds with the ability of changing the mattress's firmness, comfort, and support. Whatever partner wants, their firmness, that's their specialty, and that's their product design. And the mattresses also collect data from their smart beds into their sleep IQ reports, which help the study of sleep and just continuing their business and where they want to go. And Havertys Furniture. In 1885, the first store was opened by J.J. Haverty and his brother Michael. In 1929, the company went public as Havertys Furniture Co. And in 1979, the sales topped 100 million. So, Havertys Furniture primarily focused on overall furniture as they are an actual furniture store instead of mattresses, but mattresses are still a main supply from them. Then at Havertys, this is from their website, at Havertys we understand your goal of a warm and inviting home, not just a house. We offer the highest quality furniture, a vast array of styles, and an excellent value, so that your goal can easily become a reality. So this is where we're going to get into the financial analysis. Of course, we use the words to show the different categories of ratios to provide the financial data of these three companies. So the first category we're going to be using is liquidity, the measurement of the company's ability to pay off their short-term debts. So how fast can their assets be turned into liquid money or cash? So the current ratio. To the right we have a graph. That's usually how we're going to be set up. We have the color coordination throughout all the graphs. We have Havertys going to be in the yellow, Sleep Number's orange, and Tempur Sealy's red. So from going on out, that's how we're going. And the years used are 2016 to 2020. So the current ratio is your current assets divided by your current liabilities. Obviously you want this ratio to be high. That way you know your assets can pay off your liabilities and more. So as we can see, Haverty, with the more array of products, they seem to have a higher current ratio, but Sleep Number steady going down, but Tempur Sealy's, you got kind of a wave motion where it's going up then down then up then down and so on, following the pattern. So the acid test. This is calculated by cash plus your short-term investments plus accounts receivable divided by your current liabilities. So this is taking all your short-term assets. If the company needed money instantly, this is where you would need to go to. And you can see Haverty, very liquid so far from these past two graphs, and from 2019 to 2020, a huge jump in the acid test. And you see Sleep Number kind of just forming a U, going down, and then just in 2019 they started going back up again. And Tempur Sealy's, they're steadily going. They had a little slip up in 2017, but they're back on track, it looks like. So the current cash debt coverage. This is taken from your cash from your operating activities and then dividing that by your average current liabilities. So this is pretty much explaining what 1 year of operating income, so your total cash from getting all your operating activities, how much would that cut out of your average current liabilities? So whatever liabilities you have in the short term, where you want to be. And of course you see Havertys again continuing their dominance, you could say, over these three in terms of liquidity. But Sleep Number again, they started to go down from 2016 to 2018, started making their mark, and you see Tempur Sealy's kind of making that pattern to go up. So next category we're going to be using is management efficiency. It's how efficient the companies are at using their actual assets. So first off, we can use inventory turnover. This is going to be your cost of goods sold divided by your average inventory. Right here we have a stacked graph on the right, of course, because Tempur Sealy's dominates in the inventory turnover to the point of where they are. Haverty is half of what Sleep Number is. And then you can see Tempur Sealy's is just crazy more, you could say, efficient in their inventory as they just climb. And it seems that Sleep Number and Haverty stayed consistent through the last 5 years, but Tempur Sealy's just continues to grow and have very liquid inventory. Then next is your asset turnover. This is calculated by your net sales divided by your average total assets. So this is pretty much how assets are used to produce sales. So whether or not you're being very efficient in what you're buying and what you're actually using to create revenues. And as you can see, the top one is Sleep Number. Sleep Number actually takes this one in terms of how well you're using your assets. A very low slip up that happens from 2018 to 2019 for Haverty and Sleep Number. But you see Tempur Sealy's again straddling right above 1, so it's still not a bad ratio. Like, all these are very good. And you can see Tempur Sealy's is turning upwards from 2019 to 2020. Sleep Number's going back up, but Haverty is on the decline. Our next category that we're going to be going over is profitability. So the indicator of how much success or failure is a company. So how much money you're making every year from your actual activities. So the first category we're looking at is the profit margin on sales. This is pretty much taking your net income that you make, dividing it by your sales and how much you're actually collecting from it, or how much your products are being used. How much income are you taking after sales? And as you can see, Tempur Sealy's, except for in 2018, they're on top and with a higher profit margin, which is good because they're making more money on more of their sales. And Haverty, a big drop from 2018 to 2019, but made up for it with a huge leap from 2019 to 2020. And you can just see the pattern kind of goes, you're up, you're down, and then you're starting up from 2019 to 2020. Seems to be a pattern through all three of them. And let's move to the next one. We have our return on your assets. This is going to be calculated with your net income divided by your average total assets. And this is pretty much saying, what are your assets producing for you? So how well are you using your assets? What are they specifically doing? Every time you buy an asset, what are you using to get money back? So as you can see, Sleep Number is the highest, with always being above 0.0 or 0.1. And they took a little decline from 2018 to 2019, but of course they bounced back. Same thing with Haverty. Haverty was kind of doing a little wave. They went up to down to higher to lower, back up. But a good thing that we like seeing out of all three of these companies is that from 2019 to 2020, they are increasing and they are producing very well. So this is your return on your common stockholders' equity, calculated as your net income minus your preferred dividends divided by your average common stockholders' equity. So right here, your net income, whatever you make from all your sales and your share selling, you're minusing that by your dividends you're giving out. So that's just your total money that you are going to be able to keep, dividing it by your stockholders' equity, what everyone else has in the company. It's very hard to see the Haverty because it's right on the line, but Haverty pretty much stays consistent at a little over a zero return, which is good because it is positive. But you can see Tempur Sealy's had a very low return in 2016, but they got it up to positive. Obviously, they didn't keep growing the way that they did. That would be pretty astronomical, but very good for Tempur Sealy's. Sleep Number kind of had a decline after a good 2016-2017, and of course Haverty stays pretty consistent. So earnings per share, your net income minus your preferred dividends. Again, we're talking about how much money you're making after you give your stockholders some dividends, some money, minus your weighted average common stock. And this is how much income is being brought in after your dividends, and then after your dividends are given to your preferred stockholders. So your earnings per share, so each share that is on the stock market, this is how much you're making from it. And as you can see, Haverty in 2016 and 2018, they're negative. Of course, you never want to be negative on earnings per share because that's in the stock market. But Sleep Number, you can see consistent growth, very clean from where we go, pretty much exponential from what it appears. Very clean growth. But you see Tempur Sealy's, they start hot, start dropping towards 2018, but 2018 has been a rebound year for a lot of these companies from the financial data standpoint. And you get to see in 2019 and 2020, you see growth from Havertys and you see growth from Sleep Number, but a pretty substantial drop for Tempur Sealy's when it comes to earnings per share. Your price earnings ratio. This is going to be your market price per share, so how much each stock is going for on the market, and dividing that by your earnings per share. So we just calculated our earnings per share, and we're going to use that to take our price earnings ratio. So this is pretty much used in valuing your companies. So investors love this. They get to see if you're overvaluing or undervaluing this company. And as you can see, Haverty really skews the graph because of how much movement they actually do. And so their market price is just really, it was overvalued, and in 2016 it got back to a fair evaluation, maybe a little undervalued in 2017 after a huge loss. And then it just follows the pattern of value it, overvalue it, undervalue it, overvalue it. But it appears from 2019, after they grew, they figured out, all right, we have a good baseline for what this company's worth. And big thing, you get to see Tempur Sealy's staying above the zero, which is always good, making sure it's valued very well. But you can see right here, from 2017 to 2018, it actually goes below zero. So again, they're kind of getting overvalued, and they're staying that way, but not very substantial. So the next and final ratio we're going to be talking about is coverage. So how the companies protect their creditors, their stockholders, whatever, all their liabilities. So their debts to assets ratio. So debts to assets ratio is calculated by the total liabilities divided by your total assets. And this pretty much states how much of your assets are provided by your liabilities / creditors. And as you can see, it's not a lot. All these are pretty much they're under 1.5%, or the ratio, which is very good. Your assets should outweigh your liabilities, or else you'll be losing a lot of money. But Haverty, you see, they stay pretty consistent from 2016 to 2018, and they start growing from 2018 to 2020 in a pretty good way. Tempur Sealy's kind of see a straight decline in your debts to assets ratio, and then Sleep Number again kind of just jumps They lose a little bit from 2018 to 2019, but they get back on track to have more debts than, or a 1.2 debts to assets ratio in 2020. And then this is your total cash debt coverage. We already covered the current cash debt coverage. Again, this is your net cash from operating activities divided by average total liabilities. So this, much like the last one, is your ability to see how much your cash uh, that is created from your operating activities and what you have to spend afterwards throughout 1 year can pay your total liabilities. So as you can see, it's not a lot. 1 year of operating activities is not, it's not supposed to take all your total liabilities away. But you get to see from 2019 to 2020, all these companies are on the up and up. They're growing. I mean, you see two declines in 2018 and 2019, and you see a little increase from Tempur Sealys. But as long as they're going up, they're working towards better life. And then your book value per share. So this is how much your stock would be paid for. This is your common stockholders' equity divided by your shares outstanding. So how many shares are in the market, and taking that based on however much common stockholders' equity you have, and the prices of the shares are what the company is being sold for. So Sleep Number, very declining, or they've declined very rapidly. Their shares, when they're in, they're just not being, like, they cost money, but they're not worth much, as you can see, because they're under zero. Haverty stays pretty consistent at the 13 range, and Tempur Sealy starts to grow. They started out negative. They got a little bit of growth to about maybe 7, and finished up around 3 to 4. And now my final thoughts. I think each company has its own spots where they're most successful. I think Havertys Furniture, as we saw, is very liquid, and they can turn their assets into cash if they really need to be. I think Tempur Sealy's is very efficient in how they manage all their aspects or their assets, and they turn over a lot. But in my personal opinion, I think Sleep Number is the most profitable now, and I think it's the safest bet for the future, along with the technology that they create. I think if you're willing to invest in a mattress firm, I think Sleep Number is the one for you. And finally, here are my sources for everything I used for this presentation. Thank you.